You've been dreaming of owning a home, but with mortgage rates sitting near 7%, you might be asking yourself, should I wait for a rate cut before buying? It's a valid question, and one a lot of people are thinking about right now. But guess what? Waiting could actually cost you more. Yes, experts suggest that even if the Fed decides to cut rates, mortgage rates might not drop right away. In fact, there's a possibility they could even increase. Confused? Let's break it down. All right, let's start with the burning question. Why are mortgage rates so high right now? If you've been following the market, you've probably noticed that mortgage rates have skyrocketed compared to just a couple of years ago. Back in 2021, we saw rates as low as 2.5% for a 30-year fixed mortgage. Fast forward to today, and we're sitting around 6.78%. That's a huge jump. So, what's behind this sudden increase? Well, a big part of it has to do with the Federal Reserve. You've probably heard that the Fed raising interest rates directly influences things like credit cards and personal loans. But mortgage rates? They are a bit more complicated. They're also affected by factors like inflation expectations, economic growth, and government borrowing. We'll get to the other factors a bit later. For now, let's focus on inflation. You see, because inflation is still a concern, the government is running significant fiscal deficits, which means it needs to borrow more money. And when the government borrows, it pushes up interest rates for everyone else. But wait, what about the Fed's rate cuts? Isn't that supposed to make mortgages cheaper? Will rate cuts really make a difference? It sounds logical, but as already discussed, mortgage rates don't always follow the Fed's rate cuts. Mortgage rates are based on long-term expectations, not short-term changes in interest rates. When the Fed cuts rates, it's usually reacting to economic conditions that are already in play. So, by the time the rate cut happens, mortgage lenders have often already priced those changes into their rates. This means that when the rate cut finally comes, you might not see a dramatic drop in mortgage rates at all. In fact, there's even a chance rates could stay high or go even higher, depending on what's happening in the economy. So, with all this uncertainty, the big question is, should you wait or act now? Is now actually a good time to buy? First off, the housing market is unpredictable. Yes, mortgage rates are high, but housing prices are starting to ease in many areas. Sellers are cutting prices, especially in markets where home prices soared during the pandemic. We're also seeing more inventory on the market, with a 23% increase compared to last year. So, while rates might be high, you could find yourself getting a better deal on the actual price of the home. But if you wait too long for a rate cut, housing prices could start climbing again. Remember, when rates eventually drop, there's going to be a flood of buyers re-entering the market. More demand means higher prices, and you could end up paying more for the house itself, even if you get a slightly lower mortgage rate. The truth is, the perfect time to buy a home doesn't really exist. If you wait for the stars to align, you might be waiting forever. The best time to buy is when you're financially ready. Here's why. Buying a home isn't just about getting the lowest rate. It's also about building equity and long-term financial stability. Even if you buy now at a higher rate, you're starting your journey as a homeowner, which comes with its own set of benefits. You're no longer paying rent, which we all know has been rising faster than wages for years. In fact, rents are up 33% since before the pandemic. So, even with high rates, buying could be a smart move. And remember, you can always refinance later if rates drop. Yup, let me explain. Let's say you buy a home today at 6.78%. You lock in that rate, but a year or two from now, rates drop to 5%. You have the option to refinance, meaning you can take advantage of the lower rates and reduce your monthly payments. Sure, there are costs associated with refinancing, but in many cases, the savings over time make it worth it. If you're on the fence about buying, there are a few practical steps you can take right now to get prepared and make the best decision for your situation. First, get pre-qualified for a mortgage. This will give you a clear idea of how much you can afford and what your monthly payments would look like at current rates. Any online tools allow you to input your credit score and get an estimate of how much home you can afford based on today's rates. Once you're pre-qualified, you can start shopping around for homes in your price range. You might be surprised at the deals you can find, especially with new home builders offering incentives like rate buy-downs or price cuts to attract buyers. The bottom line? Consider buying when you're ready, not when you think the market might shift in your favor. If you found this video helpful, don't forget to hit the like button and subscribe for more tips. And, as always, feel free to drop any questions or thoughts in the comments below. We'd love to hear from you.